What's going on? Welcome back to the channel. So today we're going to talk to you about ticker NU. They just dropped their earnings. I want to go over some absolute key highlights from their earnings that you need to kind of be aware of. Aside from that, go over support and resistance and what analysts are saying. Before we get into any of that, make sure you guys hit that thumbs up. And with that, let's get right to it. So over the last 1 year, definitely doing fairly well, up 30.02%. Over the last 1 month, up 13.93%. After hours, though, it did get hit, encumbering their earnings, so it is down 8.77%. As far as the implied move, though, you can kind of see it was anticipated to be 5.8%, and so a little bit more volatile than the anticipated. And I think in general, going into the earnings, you can clearly see that there wasn't that much optimism. So the 2 weeks, 1 week, 3 days, and 1 day, all reds. So not necessarily the best. Looking at shorts, though, this one kind of says the opposite. So they were actually returning leading into the earnings. So it was good to analyze this type of information, because if they return, kind of signals that they see a little bit more upside potentially with the earnings. Vice versa could happen, but as you can kind of see, it went from roughly 4.32% to where it is now. Obviously, this isn't a squeeze play whatsoever, but it's good to, again, analyze. You see some signs of manipulation on a side note, but still, again, nothing really crazy. So cost to borrow minimum is negative, meaning that there is a broker out there physically paying people to short this stock. Aside from that, of the call options that were purchased, there's a consensus for it to be roughly around that $13 to $14 range. Then bears are anticipating for it to be sub 11. So I think overall tomorrow is going to be smack dab right in the middle between the two. But with it at 1334, that's where it closed at. And then I guess after hours, 1217, it is trading between these 2 points, so this pivot and this S1. So if you're going to see any sort of recovery, watch for it to get above this 1235, which I think is will be done fairly easily. I think in reality there's going to be a little bit of a recovery, but 1363, so that would obviously result in it being green. I don't see that being touched whatsoever. If anything, it'll probably just flirt with this pivot point throughout the day. But giving you a quick overview of any analyst ratings, so most likely there might be a couple that come out tomorrow, but then again, it's not all that popular among analysts. So last one was done 9 days ago. Doesn't logically make sense for any analyst to give a rating right before the earnings, but 9 days, I'm not really sure where they got that from. But $17 price target Barclays, John, who has a 42% success rating, so that's probably why they gave a rating. Doesn't make all that much sense, but so far since their earnings did come out, no ratings, so most likely some will be coming out tomorrow. So if you do want a follow-up video, I can definitely do that. But with all that said, I'm going to get into the actual highlights, so key highlights that you need to kind of take away from their actual earnings. Don't forget to hit that thumbs up and subscribe. Give yourself a shout out if you do own it, if you sold it, or whatever else. One thing actually I do want to go over first is if you're looking for a lot of good information such as this, even ownership, analyst forecast, everything under the sun, take a look at IBKR for all of it to be completely free. So again, definitely sign up and honestly just take advantage of the information. A lot of good stuff there. So with that said, let's get right to it.
New Holdings targets 70% TAM for Brazil payroll loans amid $28.9 billion deposit growth. Earnings call insights. New Holdings 𝗖𝗢𝗡𝗘𝗖𝗧 NU Q4 2024 Management View. CEO 𝗪𝗪𝗧𝗛 highlighted that New Holdings now serves over 114 million customers, with 20.4 million net additions in 2024. The active customer base grew 22% year over year to nearly 95 million. In Brazil, the company serves 58% of the population, consolidating its position as the third largest financial institution by customer count. While Mexico surpassed 10 million customers, total deposits grew 55% year over year to $28.9 billion, with significant contributions from Mexico and Colombia. Interest-earning portfolio expanded 75% to $11.2 billion. Revenues increased 58% year over year to $11.5 billion, with a 23% rise in RPAC to 10.7. The secured lending portfolio in Brazil surged 615% year over year to $1.4 billion, driven by 9 new agreements with public sector collateral counterparties. This expanded the total addressable market, TAM, for payroll loans to 70%. CFO 𝗪𝗲𝗪𝗧𝗛 emphasized, net income almost doubled to close to $2 billion in 2024, with an annualized return on equity of 28%, placing NYSE among the most profitable financial institutions globally. COO Youssef Laresh reported that 15 to 90-day NPLs declined 30 basis points to 4.1%, driven by a mixed shift toward lower-risk products and customers. Outlook. Management outlined plans to deepen its market presence in Brazil, Mexico, and Colombia in 2025, aiming to increase principality and expand TAM for payroll loans. The company also indicated upcoming product launches under its money platform strategy. NYSE Holdings plans to refine its PIX financing offer, with no immediate expansion expected in the next 1 or 2 quarters. CEO Velez reiterated the focus on long-term growth and described 2025 as another pivotal year of investment. Financial results: adjusted EPS for Q4 2024 was $0.12 versus analysts' estimate of the revenue reached $3.0 billion compared to analysts' estimate of $3.17 billion. Net income for the quarter was $553 million, an 85% year-over-year increase. Adjusted net income rose 87% year-over-year to $610 million. Lending originations surged 84% year-over-year to BRL 18.4 billion, with 15% of this from secured loans. FGTS-backed loans accounted for 60% of secured lending originations, with NYSE achieving a 30% market share. Deposits in Mexico increased fourfold to $4.5 billion, while Colombian deposits reached $0.3 billion, placing NYSE among the top 5 banks in Colombia for demand deposits. Gross profit rose 44% year-over-year to $1.4 billion, with gross profit margins at 45.6%. Q&A. Jorge Kuri, Morgan Stanley, asked about PIX financing growth. CFO Lago clarified that growth would align with the overall credit card portfolio, adding, "We reduced eligibility growth for lower credit bands to address second-order impacts on NPS and engagement." Eduardo Rosman, BTG Pactual, queried on unsecured personal loans growth. COO Laresh noted the focus on repeat users and improved credit modeling, enabling lower rates and larger loan sizes. Tito Labarta, Goldman Sachs, sought clarity on secured lending. CFO Lago highlighted the rapid expansion of payroll loans and FGTS-backed loans, supported by new agreements and digital distribution advantages. Mario Pieri, Bank of America, questioned risk-adjusted NIMs. CFO Lago attributed the decline to increased secured lending, higher funding costs in Mexico, Colombia, and FX impacts, but highlighted potential for NIM expansion as loan-to-deposit ratios improve. Sentiment analysis. Analysts' tone was slightly positive, with questions focused on product performance, profitability, and macroeconomic implications. Concerns centered on NIM compression and PIX financing. Management maintained a confident tone during prepared remarks but adopted a more cautious stance in Q&A, particularly on short-term PIX financing growth and macro risks. Compared to the previous quarter, sentiment from both analysts and management remained consistent, with an emphasis on long-term growth strategies. Quarter-over-quarter comparison: deposits grew to $28.9 billion from $28.3 billion in Q3. Net income rose to $553 million from $553 million in Q3. Lending portfolio growth outpaced Q3, driven by secured lending and FGTS-backed loans. Management's tone remained focused on strategic expansions, while analysts maintained interest in NIM trends and macroeconomic impacts. New agreements in Brazil expanded TAM for payroll loans to 70%, compared to Q3's 50% focus on INSS and CAP collaterals. Risks and concerns: macroeconomic uncertainty in Brazil and its impact on asset quality were flagged. COO Laresh emphasized, "We always underwrite with a forward-looking stress assumption." Analyst concerns included NIM compression, funding cost pressures in new geographies, and the pace of PIX financing growth. Management aims to mitigate risks by refining credit models and leveraging digital distribution channels for secured lending. Final takeaway: NYSE Holdings demonstrated strong growth in customer base, deposits, and secured lending, supported by significant progress in Brazil, Mexico, and Colombia. The company's strategic focus on expanding TAM for payroll loans and strengthening its digital ecosystem highlights its long-term growth potential. Management remains cautious on short-term PIX financing expansion, but optimistic about broader market opportunities in 2025.